I mean, if you're telling me that all sectors are going to have, really stellar earnings growth, then where do I not want to be?
Well, I'm not saying really stellar earnings growth, but just positive earnings growth for the first time in a long time. And I think if we were calling for an everything rally, we would be pounding the table on maybe the small and mid cap complex. But for now, we're somewhat agnostic between that part of the market and the larger cap part of the market. We do still think, that Magnificent Seven cohort can do a lot of the heavy lifting and likely post stronger growth numbers than the remaining 493. But I think a broadening of the rally and some degree of rotation should be expected in the year ahead.
Samir, how do you see it?
Yeah, I mean, look, I think you've got to kind of continue with the hot hands, right? I mean, we like comm services. That's probably the most reasonably priced of the three growth areas. We recently upgraded consumer discretionary. That's where you've got your kind of EV players and your e-commerce players. I think you've got to have a full weighting there. I think you have to have a full weighting of technology, right? That's kind of the epicenter where all this spending is happening. And then I think there's other spots too, right? We like energy, right? If you're going to have all this AI power generation, it's going to be powered, at least in the short term, probably by natural gas, right? So energy has a much cleaner story than it has in recent years. We like industrials, we like financials. Both of those have to do with kind of the financing of AI and just the economy more broadly, along with just building out those data centers, that electrification. And so, again, I think there's a lot of different things that are working. Probably the only thing we would fade would be emerging market equities and defensives within the U.S. because, again, I think there's a lot of growth in other places.
Are you expecting that the run we're seeing late year in mega cap is going to have a January effect? Once the calendar turns, we start thinking about some tax selling and things of the like?
I've definitely heard investors, talk a little bit about waiting until the new year to take gains. But I think the way you want to go into the next year is a lot of people are waiting for that type of opportunity. So I think you go in with those full weightings. And I think, honestly, if there is a pullback, you probably lean into that to add to some of these areas. Because, again, I think pullbacks will be very short and shallow, especially in the first half of next year when all of this positivity kind of plays itself out.
Is that what you think, Elyse, that you're going to get, if any pullback is just going to be bought? Because there's all this optimism about what a new administration is going to mean, deregulation, tax cuts, higher growth, more investment in the U.S., all the things that we hear about almost every day now.
It certainly seems to be the case, at least on the equity side, but we're looking across asset classes for opportunities as well. In core fixed income, it's probably going to be carry-like returns in the year ahead, but especially given how hard the equity market has rallied this year, last year, we also want to look for other ways to renew portfolio resilience and make sure we're kind of like fleshing out the full portfolio.
Would we be foolish to think that we could have another banner year in stocks because we've had two in a row?
It's happened. The problem is after you've had 3 years in a row of really strong returns, what has typically happened is very poor returns in the following years. So if we get another year of 20% plus returns and it's mostly driven by multiple expansion as it was this year, you do run the risk that forward returns would drop precipitously. And so we do have to be aware that things like leverage are picking up a lot in this market. And this is one thing that could keep people from being able to buy the dip. FINRA margin loan debt is up 45% year to date. You're seeing leverage ETF buying, options buying, all suggesting that people are starting to take on a lot more risk. So down markets are not as easily digested.